Tesla stock is one of the most polarizing on the street. On one side, we have the bulls who are all in CEO Elon Musk's clean energy vision. But on the other, there's a legion of short sellers who believe financial reality will eventually catch up with the company. Gordon Johnson, founder and CEO of GLJ Research, and Galileo Russell, founder of HyperChange TV, join us now to duke it out. How about that? There are bull and bear arguments for the stock today. Gordon, I'm going to start with you. Your strongest case.
Right. So Elon Musk in February of 2019 said that Tesla was going to deliver 420 to 600,000 cars. The number came in at 367.5. If you look at Europe as over the first 29 days of 1Q20 versus the first 29 days of 4Q19, sales in Norway, Netherlands, Spain are down 40%. That's over 50% of their demand in Europe. U.S. sales last year, total Tesla cars sold fell 3%. Model 3 cars in the fourth quarter fell 32% year over year. And you have a pandemic breakout in China, the likes of which we've never seen, which is going to significantly dent their ability to sell cars in China. And then lastly, back to Europe, they're building a factory to make 500,000 cars. And they only have 8,000 cars in transit on boats to basically Europe, China, and South Korea. The same number over the same amount of days last quarter was 23,000, 63% fall. I think they have a big demand problem. I think numbers tonight are okay, but I think you're going to have a lot of one-time items like, FSD revenue recognition, credit sales, et cetera. And I think they have a disaster of a year in 2020 ahead of them. And I think you're going to hear some of that tonight when they talk about 1Q.
All right, Galileo, over to you. What do you say to all of that?
Yeah, I'm chuckling to myself because I've seen Gordon pound the table on his $90 price target for years and just be dead wrong. In the past 5 quarters, in the past 6 quarters, 5 of them, Tesla's produced positive free cash flow, which used to be the short selling argument. They're going to report 4 out of 6 quarters of positive earnings when they do Q4. Deliveries were up 50% this year overall. I think it's really easy to cherry pick certain numbers, but the truth is the financial success of Tesla is actually catching up to the market. The reason why the stock is soaring is because they validated their business model. They've proven they can make earnings, positive free cash flow while growing 50% in an auto market that's stagnant. They're outselling all of their competition. Volkswagen CEO, Porsche CEO, they were all saying Tesla's a joke. Now they're trying to copy them as fast as possible. I think it's just becoming clearer and clear that the disruption in the auto industry is being led by Tesla, and this is a multi-year growth story in the making. And 2019 was really the year where they've proven that their business is not only successful from a product standpoint, but financially viable as well. And that is why I think shares are going to continue soaring. They may pull back a little because they've run up so much into earnings, but I think the long-term story has never looked brighter and stronger. And people like Gordon have never been proven wrong more and more times again in a row.
Can I jump in there? So when you say I've been proven wrong, Tesla, over the past 10 years, every single year, they've lost money on the net income line. Over those 10 years, they have a cumulative loss of over $6 billion, despite billions of dollars in taxpayer incentives. And it's just factually incorrect. They haven't generated free cash flow over the past 5 quarters. I don't know how you're defining that, but when looking at operating cash flow less CapEx, that's just factually incorrect. We'll see what happens this year. But when looking at the facts and not looking at an aspirational story, demand for their cars is collapsing in Europe, the USA, and China, as well as, pretty much every other locale. And you're going to see that in 1Q. 4Q, they did about 111,000 in deliveries. I think that number could be as low as 80,000 in 1Q. They're selling 367,000 cars a year. VW's doing millions of cars per year.
If I can hit pause for just a second. I mean, we could just watch you guys duke it out, and you like you would be happy to do that. But I do want to ask you, Gordon.
Sure.
I mean, to your point, if there is indeed a divergence between the fundamentals and the stock price, the fact of the matter is, if the stock price is going up, then the shorts get squeezed. And that's what we have. We have indeed. That is also a fact that we have seen that happen, that the people who have sold this stock short,
right,
it's been problematic. And
we used to talk a lot and debate a lot at Bloomberg, right? Look at Tilray stock. It went to 300. Fell to 12. Look at Sun Edison stock. Remember, we used to talk about that. It was at 30, went to 0.
No,
stocks get dislocated from reality, which Tesla is right now. It reminds me of the tulip boom, where people were paying hundreds, thousands of dollars for tulips, risk adjusted for currency, back in the 1600s. You have these bubbles in the market, and that's what this is.
Galileo, I know that you're chuckling listening to this, but I got to ask you a kind of dumbed down question from a guy who loves cars, but the cars I work on are from Studebaker. they haven't really designed anything new at Tesla. The Model S is, what, 16 years old? And it's kind of getting kind of dull boring.
Well, the Model S is 8 years old. I want to correct my cash flow statement. So this quarter, in Q4, when Tesla reports positive cash flow, that will be 5 out of the past 6 quarters with positive operating cash flow. And in the past 2 quarters, they've done $1 billion in free cash flow. In the past 2 quarters, $1.5 billion in operating cash flow. I mean, those are the facts. They are actually making money. If you look back to Gordon's research a year or two ago, he said this was impossible. They would lose money on every single car they sold. They just proven that wrong. And additionally, I mean, there's so much innovation happening in Tesla. They just unveiled the Cybertruck. They probably got hundreds of millions of dollars worth of free advertising overnight. They generated a multi-billion-dollar backlog for a product. I think there's more exciting innovation happening at Tesla than any other company in the automotive sector by far. That's why we're seeing their sales grow 50% in 2019. They're going to announce really strong guidance for 2020. They just spent a year building a factory in China. Yes, we have some issues with the coronavirus, but long term, that's the biggest electric vehicle market. Tesla is the first wholly owned factory in that region, going to provide huge growth for years to come. There's a reason why they keep announcing more.
Can I address the China? So in China, in the fourth quarter in China, they sold under 13,000 cars. Annualized, that's less than 50,000 cars. They're targeting doing about 120 or 150,000 cars or 37,000 cars per quarter in China. We know that their market share in China fell from 6.5% in Q3 to 4.5% in Q4. They're nowhere close to meeting what they say they're going to produce in China. So when you say that things are going well in China, that's just factually incorrect. And when you say they make the money on the cars they sold, in the third quarter, they recognized $85 million in FX benefit. That's not recurring. They recognized $63 million in FSD revenue recognition. That's not recurring. $30 million of which was associated with them pushing out the car that comes to pick you up. And there were other one-time items that they highlighted in their press release that aren't going to repeat. You take those out, you adjust their warranty accounting to actually account for the amount of warranty they should be reserving, and they're losing money. We know that they account for warranty accruals as goodwill, so that completely boosts their gross profit and their actual profit reported. So you can't say they're making money on each car. That's actually, in our view, and I think people who know accounting, factually incorrect.
I mean, I think, Gordon, you're a smart guy. The point is here, you can cherry pick a million data points if you want to and try and make the paint the picture to seem ugly. They had $5 billion in cash, then they had $5.3 billion the next quarter. They're just piling up cash in their bank account. That's what's happening overall. They're outselling all of the competition. You're looking in the rearview mirror with China data. They're about to drop prices by 20%. The reason why sales are falling in Q4 because everyone's waiting for the Made in China Model 3. I mean, the hype in China is off the charts.
Galileo, in 2016, you said the Model S and X was going to take over the luxury market. That was the Tesla story in 2016, that they were going to take over the luxury market completely with the S and X. Now they're talking about discontinuing those cars. So what's the story now?
I don't want to be interrupted. Sorry.
All right, maybe we should just call pause on this. Gordon Johnson, founder and CEO of GLJ Research, and Galileo Russell, founder of HyperChange. Thanks for being good sports guys.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.